India has now become the fourth largest stock market in the world. On January 22nd, the Indian stock market overtook the Hong Kong stock market as the fourth largest stock market in the world with a valuation of $4.33 trillion as opposed to the valuation of the Hong Kong stock market which stood at $4.29 trillion. Now, the gap between the two markets is not much at this point of time, but the expectation of this gap to widen in the coming years is increasing. Before we dive deep into the subject, please subscribe to our YouTube channel so that you do not miss our new videos. So, just a month ago in December 2023, the Indian stock market hit a market valuation of $4 trillion, and I've talked about that in detail as to how the Indian stock market hit a market valuation of $4 trillion and what were the reasons behind it and what it means for India and the globe as a whole. I've talked about that in detail in this video here. Now, if you're interested in checking out that video, please click the link in the description below. Let us take a look at the biggest stock markets in the world. There's no question the US stock market is the largest stock market in the world with a market valuation of over $50 trillion, which is followed by the Chinese stock market, which has a market valuation of about $8.44 trillion. So there's a huge gap between the US stock market and the Chinese stock market. Now, the Chinese stock market is followed by the Japanese stock market, which is currently standing at a valuation of about $6.36 trillion, which is then followed by India and then Hong Kong. 2023 was a bullish year for Indian investors and the Indian stock market as a whole because Nifty saw a growth of about 20% and Sensex grew at about 18.8%. What are Nifty 50 and Sensex? Now, first, let us understand what Nifty 50 is. So, Nifty 50 is an index of the top 50 publicly listed companies on the National Stock Exchange. It is basically a basket of the biggest of the 50 companies that are listed on the National Stock Exchange. On the other hand, Sensex is a basket or an index of 30 largest companies that are listed on the Bombay Stock Exchange. Now, the NSE and BSE are two of the biggest stock exchanges in India. Not only that, but Sensex in the last 10 years, when you look at the growth of Sensex, it was at around 24,716 points in May 2014. And when we look at the current stats, it is currently standing at 71,000 points. So that is a 3 times growth in a span of about 10 years. Not only that, but a major reason for the recent growth in the stock market, specifically when we look at the 2023 numbers, has been an increase in the foreign portfolio investment. So the foreign portfolio investment stands at about 1.7 lakh crores in 2023, which is equivalent to about $20 billion. And why are foreign investors interested in investing in India? I've talked about that in detail in this video here. You can check out that video after you complete watching this video. The link is in the description. Now, just to give you a gist as to why foreign investors are investing in India, a major reason is the growth in the GDP of India. Now, just last quarter in 2023, Indian economy grew at about 7.6%, which was an unexpected number. Everyone was expecting a growth of about 6.8%. There's also a huge increase in the demand for domestic consumption. Not only that, but the amount of retail investors are also growing. Then there's a growth in the number of IPOs in 2023. All of these factors combined, they're attracting foreign investors to invest in India because frankly speaking, foreign investors, they're interested in earning profits. Wherever they're finding an opportunity, they're pouring their money into those markets, and India is on top of their list, and we are going to talk about that in a bit. But before that, IMF has also said that India has been a star performer in terms of growth, as it has contributed about 16% to the global growth, and a major reason for about 1/6 contribution to the total economy has been the growth of key sectors including infrastructure and digitization. Now, as India moves ahead, we are going to witness a huge change in technological advancements. We are going to witness some changes in the upcoming technologies including artificial intelligence. And now that we're talking about artificial intelligence, let me introduce you to this new AI tool. Are you tired of navigating the complexities of SEO? Meet Siona, your new AI SEO ally. Siona analyzes, suggests, and optimizes your website automatically, from code enhancements to AI blog posts. Let Siona elevate your online game effortlessly. Autocode optimization, AI blog posts, smart keywords, all in one place. Now, you're also going to get weekly analysis and insights. which will help you to monitor your online success with a sleek dashboard. Are you ready to shine in the digital spotlight? Your website deserves to have this AI tool. Click the link in description to get started. Now, getting back to the video, India is also becoming the #1 country of preference for foreign investors, as per the survey that was conducted by Official Monetary and Financial Institution Forum, which is a think tank. That survey included about 100 funds with a total financial strength of about $26 trillion. When they were asked about their preference, about 2/5 of the funds, or about 40 funds out of the whole lot, they preferred India in terms of emerging markets, followed by about a quarter of funds picking up China, about 25 funds. And a major reason for that is the ongoing Chinese economic crisis, which mostly revolves around the Chinese real estate market. And I've talked about that in detail as well in this video here. So if you're interested in learning about what is actually going on in the Chinese economy and what are the struggles, what are the problems they're facing right now, you can click the link in the description below to understand the whole situation. Collectively, the Chinese and the Hong Kong stock markets, they have lost about 6 trillion in market valuation since 2021. Now, investors are losing their confidence in the Chinese and the Hong Kong stock markets due to the current crisis that China is facing. And now, Hong Kong stock market is also suffering because many of the Chinese companies that want to attract foreign investment, they're listed on the Hong Kong Stock Exchange. Now, the Hang Seng Index was down about 10%, but the news of China taking strict measures to stimulate the economy with a $278 billion package lifted the market sentiments, and the market went from a loss of 10% to about 5%. The Hong Kong stock market has been a gateway for investors that want to invest in the Chinese economy, specifically foreign investors. And in the last 5 years, the Hong Kong stock market has witnessed a downfall of about 42%. The Hang Seng Index is down about 42% in the last 5 years. Not only that, but the Chinese economy is also expected to grow at a slower rate. It grew at about 5% in 2023, and this rate is expected to go below 5% in the coming years. China is currently dealing with a lot of issues, starting with the real estate crisis that it is facing. Then you have the youth unemployment problem. Then you have problems like deflation and an aging population. So China is currently dealing with all of these issues. And then China is also at a trade war with the US. So a lot of companies that were invested in China, they're moving out of China and they're targeting other Southeast Asian and South Asian markets. So China has their own problems to deal with. And regardless of the problems that China is facing, India at this point of time is looking strong in terms of economic growth and has a lot of potential in the coming years. And a major reason for that is the increase in the domestic consumption, an increase in the GDP growth. There's a huge potential in the young population of India, combined with a growth in IPOs as experienced in 2023, a growth in the number of retail investors investing in the country, and a politically stable environment. So all of these factors combined are making India look confident in front of foreign investors. And that is why India is the #1 preference of many of the funds that are looking to invest in emerging markets. So what are your predictions for 2024? Where is the Indian economy headed to? Let me know your thoughts in the comments below. If you enjoyed watching this video, please subscribe to our YouTube channel and share it with your friends and family. Thanks for watching this video and have a great day.